Good morning, everybody. It is Tuesday, February 1st, 2022, kicking into a new month here. And might as well take a look at yesterday here. So, pretty much what we were looking at is the 5 days of basically the last week of price action we were still stuck in yesterday. And we were, I believe, let me see here. Just about, yeah, just around the open, we had attempted to break out in the overnight session going into yesterday. You can see we didn't even make it up to that high at 46 quarter. Failed and pulled back kind of just before the open yesterday. So we basically said being within all this chop over here, it was basically going to be kind of a mess down inside here. Ideally, we wanted to see that breakout to the upside. If we did break out to the upside, we talked about first of all 45.50, our eye level, and the high of the previous weekly session at 46 quarter being that first level we wanted to get through. And once we could get through there, we were targeting 74.50. And then there was a swing low all the way back at 84. Let's see if I can even bring it up on a 30-minute chart. I might have to jump down to, I believe that's it right there. So this major swing low here at 84 was sitting here naked, never really tested. So as we were pushing back up into that naked swing low over there, that I told everybody was our ultimate target for yesterday. Now, that doesn't mean the market had to stop there, right? That was just kind of the major target to the upside. If the bulls wanted to continue to push, then what was our next level we were looking at? Well, that was the next major swing low here, up around 44, 45. What's the low? 45, 14, 50. Let me just make sure it doesn't swing any lower there. Yeah, 1450 was right up there, and that was basically the next line. Once we got through this, where was the swing low? This lower swing low here. So once we could get through there, it was now up into that next area. And I just want to show you guys what ended up happening here. Let's zoom in and take a look at the end of the day. They did, get the pullback. They held, interestingly enough, they came down and pulled back in the overnight session and held our eye level at 43.98. It did peak below it by 2.5 points there, but essentially held that area and zonked right out and started pushing higher there. And so all morning it was basically just like a really strong bull rally up. I took some counter trend shorts off of some of the levels on the way up there and urged everybody, if you were long, to be taking profit in front of a lot of these areas. So let me see. Coming up, the high of the day was 0850, right? So let me just zoom out here. And this might not be the best time frame to look. Yeah, so there it is. So the swing low was 1450. The high of the day was 0850. So we came up, we got through our eye level at 96.75. We pushed just about another 10 points, almost to that swing low, and pulled back going into the close there. And now in the overnight session, you can see we actually pushed. What's the high of the overnight session? 45.1450. What's the swing low back here? 45.1450. All right, so right into the major swing low and a failure in the overnight session, and that's where it brings us here. So came right to the expected swing low, got something like let's see, 1450, and the low was 82. So a good 35 point pullback, and now we're stuck within this overnight range. So the high of the overnight, low of the overnight, we're still stuck within the, let's say, 44.80 to 45.14 area. So let's go ahead and zoom out now and jump on through all the high time frames. And went ahead and went through the ultra high time frames here in our Monday broadcast. So if you're interested in what the higher time frames are kind of saying, that we spent a little more time there. But what I have to do this morning is talk about the official close candle on the monthly, right? So our January candle has closed. You see huge bearish engulfing. It didn't close below the previous bar, so that's somewhat good, right? But we do have basically 50% of the candle is a wick to the downside. Now it did close red, right? But overall, it looked like this candle is telling me it looks like we have some really strong bullish follow through from that pullback. That's basically all I can read from that. I don't think that there's anything else I can really um, eke out of this monthly chart right now, outside the fact that we have our retracement scheme to the all-time high and a 38% retracement all the way down to 37,3,800, which would be I mean, almost another 1,000 points down. Remember, anything's possible, and we could see some type of major correction, especially considering kind of the global situation, especially in the United States, looking like total garbage economically. So we'll see what happens. But I just figured we just spend a moment here and take a look at that official close candle now. This new candle on the monthly ideally will not break the low of that wick, right? And we will come up and hopefully get a break to the upside for the bullish case. But I don't know how else to interpret it right now. It's just very bearish divergence off the high with a very bearish candle. So I don't know if that means we have a couple more red candles to go before there's a full-on major reversal or not. But there seems to be some capitulations to the upside ever since we got that 12, so 42.12. So we'll see what happens. Our weekly, we said that was our first clue for the bulls because we actually got a nice red candle, really nice doji to the downside like that. So looked like a nice reversal. And now that the monthly just closed, that does to me kind of confirm somewhat of a bullish case. Although, we're still closing at the lows of the candle, definitely not at the highs. So the weekly had that one bullish indication, and we're starting to recover. We broke the high of that potential reversal bar. So now we're pushing right in this new week and coming up to the previous, and I might have to update. Well, no, this is 50% of that previous weekly bar, and we're pushing up into that right now, right? The 50% of the previous weekly bar is technically down here, probably just around 43.20-ish. I'll have to put that in there, and I'll update these two levels. But we are pushing right up into 50% of that the weekly bar before the previous week here. So that'll be important to get through. And you can even see that swing low here at 45.20 quarter on that candle is exactly where we're kind of pushing up into now. We haven't made it to the actual swing low on the weekly candle there, but we're just a few points below. All right, enough of the high time frames. Let's get down into the shorter time frames here. The daily, really quickly, we've talked about this. Remember yesterday we said if we could get through 46 quarter, right? 46 quarter, yeah. We can push through there. We've got the swing low back here at 44.84, and if we can get through that swing low, we're going to push up, and then we have another kind of area in here, and you can't see on the daily our nice 10-minute, 30-minute swing low wick at 45.14.50. You can actually, yeah, you can't see it because there's just not enough resolution. But what we were looking at on the daily here was the 50% retracement at 10.50, and then the other major swing low we could actually see on the daily, which was over here at 45.20 quarter. So we told you yesterday there was a 10-point range. We had 45.10.50 to 45.20, basically the swing low here at 20 quarter, and then we shaded that region from yesterday and said that would make sense to be an area of resistance. And again, we came up yesterday, the high of the day yesterday was 45.08.50, so just 2 points below the 50% retrace of the whole push down. And then in the overnight session, we pushed right up into that swing low we talked about and right into the zone that we expected as potential resistance, and we got that 15-20 point pullback in the overnight session. So pretty good so far. And there's one other kind of interesting thing to look at this high that we found resistance at here, not only at the end of the day, but in the overnight session when they tried to continue to push higher. And that is this right here. Let's take a look at the 4-hour chart. If you measure the fib from the low of last week to the high of last week, so from that 12 low up to that 44.46 quarter high, and you put a fib up, look where the 27% extension of the previous weekly price action brings us. It brings us to 0975. The high of the day was 0850. The overnight was 1450. So everything was lining up right in this region. So this morning, I think you guys kind of see what the idea is here. If the bulls are going to be strong, then we might get some type of pullback and maybe even a pullback back into the previous weekly range, which wouldn't be ideal, but we could get a pullback and then and if the bulls are going to be strong, they're going to get through that 1450 swing low there, right? So we can see it down here on the 4 hour, and so that is going to be important to get through this morning. And essentially this whole shaded region going up into that major swing low from 20 quarter, right? So this whole area in here, it's not too surprising that we've got a pullback yesterday and then a pullback in the overnight session right in here. Just keep in mind 20 quarter would be the upper end of that shaded region, and then once we get through there, it's opening us up right back up into our next expected shaded area, somewhere up around say 45.69 and then up into that 45.80 area. All right, it's also, interestingly enough, the 61.8 retrace up at 45.80 is essentially the 61.8 extension of the previous weekly chop range, right? So the 27 is what was tested here essentially to the tick within a few points and got the pullback. So pushing up to the 61, finding resistance not only because of the retracement or the extension, but because we had a lot of failure from there, and then we got this really strong support again from that. Let's get the actual level, 45.70 to 75. So it's the same thing, basically a little 72.75 is the swing low to the tick, if I could get that there, and basically another little 10, maybe 15 point range up. Again, we're on the high time frame, so the actual swing high up there is 94 quarter. So it's like a 20 point range in here. A whole bunch of stuff lining up over there. And then notice the 100% extension of the previous weekly chop zone brings us right to the top end where we failed and found a lot of support and resistance up here around this 46.70, 46.80 area. So that's the idea this morning. If we can get through that 45.09 area, 45.14, I guess, if we can get through there, that's that next area where I would expect the larger target for potential resistance. And then I want to open up one other concept here. Remember, we've been talking about these general kind of chop zones, right? Areas where we see major resistance, major support, and a lot of bouncing. And then we see once we get through that area and get up to a new area in the chart, it acts as kind of like a support zone, right? And then if we break down below it and back into it, it can act as a resistance at the top end to come back down. And we see this kind of in a lot of general areas. And there are very tight chopped little zones. And then there's like the general area where if you highlight it and you look, it acts as a support at the top, a resistance at the bottom, and we see a lot of chop within it. So there are little tight channels, but then there are these larger zones, right? Like from down here around 43.30 up to just about that magenta line at about 44.60 here. A lot of kind of support and then resistance at that line, right? Comes up, and then once we get above that line and pull back, it becomes that support, right? So we've got these general kind of structure areas. I want you to look at the market from this perspective. We came down and we talked about the chop zone we were in here and brought it over and showed that essentially it was kind of these two this major zone bifurcated right around the 50% area there, and it's just kind of a very nice general chop area. We came down into there. Now, yesterday we said we have to get through this chop area, and then once we do that, we'll push up into the new chop area, which is that swing low at 1450 approximately, right, down to about the swing highs from that chop area from last week. And if you zoom out and take a look, we've essentially come up, and it's crude, it's general, it's not going to be to the tick or even to 1 point, but generally just about, again, the magenta line, let's say 44.40 up to just around 4500, 45.20, is this new chop zone, and we got through the magenta line, basically the highs of the previous week, and now we're pushing up and finding resistance right around the top end of the new chop area, right? So it was support and resistance, again, getting above it, coming back. We did probe right into it, and so it's not perfect here. But essentially kind of found support, held above, came back, retested the top end, pushed off again, came down, and again, our 1450 came down, bounced off at 1450, attempted to break out again. Bulls didn't have enough strength and continued to sell. So we're pushing right into this area. If we get through here, what is that next kind of zone? Where it's a little tricky up in here, but I think you guys would agree is something somewhere around right here. You see that area? Comes down to 1450, comes up, finds resistance right around 4600 here, fails, and then isn't able to hold and comes back into this zone down here. If we expand this zone out and look, there you have it. Support at the bottom, resistance right there at the top for the pullback, and then the bounce to a higher zone. And then we can see it even all through over here. I mean, again, it's a little bit crude and sometimes it's messy, but look, nice support right off the top end of the zone, coming down to the bottom end of the zone, finding the support, coming back up, and finding that. Now, again, this is a little bit messy right here, but I think you can agree right there is the chop. It agrees with it right there. It essentially agrees with it here, although it peaks down into the next zone. Again, the market is not going to be picture perfect every time. And then over here, again, maybe not as conclusive, but I would argue that looking in this general region here, this, at least for the last month and a half, has been an area that the market has kind of consolidated within. And then, so this is the top end that I shaded over here, essentially the top end of this potential little chop area, right? This new area of structure. If we get through there, we're pushing up into the next block, which is probably more so this area right here. You can see it coming across, was basically support, came down into it, found support at the bottom end, came up. Now, it's messy in here. I think these zones, it's very, very obvious. This little zone down here is obvious. The next one up at the top is pretty obvious. And then this one that we just pushed into is pretty obvious as well. Up top, it's a little bit more kind of choppy, right? But I do think that again, the top end of the zone is our target for this morning if they break out. And if the bulls are going to be strong, they'll just go ahead and get through the top end of that and now push up to this zone right in here, right? So this next area where we found good support at the bottom, pretty good resistance at the top, and then price from the top end came down and basically found support until it fell into that region there. So if we get up through the 61.8 retrace extension of the previous week, we'll then push up to the top end and potentially, or I'm sorry, push through that and come into this new zone. If they get through this zone, and the top end would be just about the 100% extension, we're now back up into this little area here, right? So pretty good resistance from the highs. Maybe not the greatest argument for the low end of this zone here, but if you just kind of look, the bottom end of the zone is where we found resistance multiple times, and then it became support. Now I told you up top here, it's maybe just a little bit more messy, but I think you get the idea. You got your box right here that we're in. If we can get through there, we've got the box up here. Basically the 27 extension to the 61. Getting through there, we have our box between the 61 and the 100. Getting through there, we have this smaller box here from about 46.70 to 47.40, just about a little under 100 points. And then finally, we come up to the all-time highs in this new chop block right there. So that would be the general scheme. Here's our general support and resistance lines coming across these blocks, right? So this is kind of a different perspective, and I've been introducing it for, I don't know, 3, 4, 5 months now. And it is these areas, these blocks in the market where we do see A lot of resistance on the top end, a lot of support at the bottom end, and then sometimes there's really wide zones, and you can actually pull out some of these smaller little blocks within it. And a lot of times it's pretty much a perfect 50% break of the zone, right? So, and that's why I yesterday also brought up we have these blocks kind of coming all the way down. Now these are a little bit more specific to tighter chop zones. If you look at the larger structure, you might highlight a larger area, but that's kind of the same idea, looking at these areas of chop and what I've been calling areas of structure in the market. Anyway, I spent a lot of time on that. This was more so maybe a lesson than a pre-market, but you get the idea, getting up above the levels. We talked about specific levels here, so hopefully you wrote them down and you know, or you marked them on your chart as I was giving them. Of course, if we pull back here and we get down below the magenta line, 50% of the previous day, and we get down into this zone, we're back into chop. And there are some retracements we want to be aware of. There's a retracement of the push from the low of yesterday all the way to the overnight high. So we've got that scheme going on. A larger picture is the whole push from the lows of January 28th all the way up. And the largest picture is the entire thing from the previous weekly low to the current high. So those are things I'm watching. Again, I'm going to be paying attention to the smaller leg, and if it can't respect these retracement levels, I'll zoom out and get the larger retracement on there, right? And we're just about a minute and a half until the open, so we really need to get down to these short time frames and start getting ready for the open. So I'm going to jump to the member section for everyone watching out on the internet. Have a great day. We'll see you tomorrow.